This is London with Bitcoin Spike VIP Trader. It's a holiday weekend, guys. It's a long weekend, 3-day weekend. We had off with equities today. I want to bring some attention to some specific aspects of the indicator right now in terms of what we're looking at, cap line, pack. Pay attention, please. On the cap line pack, you will have the opportunity to choose your signal settings. Your signal will be either a moving average cross. If you were to choose a moving average cross, let's say that you have a great tactic that you trade the 5 over the 20, or the 4 over the 9, or the 9 over the 18, or the 50 over the 200, or the 100. If you have a moving average, pay attention, if you have a moving average that you like to work with, you can choose moving average cross here under signal settings. You can go to secondary moving average settings. There's going to be your secondary moving average setting, okay? And just remember, if you're specifying your own moving averages, it's going to be the secondary. And I'll talk about the primary here in 1 second. But you can specify, for instance, if you want to look at, out of the box, it's an exponential moving average over a simple moving average. It's a 9 over a 9. But look at all of the options that you have. You have everything from kernel to VWAP, to simple moving average to whole moving average. You've got exponential, guys, you've got a slew of volume weighted moving average. You've got a slew of options here to choose from in terms of the two specific moving averages that you would like to use. I would stick with simple. And maybe you want to throw in an exponential, maybe. But this gets highly advanced in terms of what you want to present. But this indicator will enable you to retrieve signals based upon if you wanted to work in a whole at time period X with an exponential at time period Y or Z, right? So looking at the details and continue to pay attention. If you don't do crossovers, we'll get to that. What's important is not only your ability to provide signals based on your moving averages of choice, right? But let's say we want to work with our cap line. You guys are familiar with our volatility tool, right? Pay attention, please. We want to work with our cap line, right? Blue typically means it's going up, right? It's a momentum MACD and RSI indicator, I'd say, or momentum is MACD, but we would say momentum, RSI, and RSI stochastics, okay? All computed in with a kernel regression formula, okay? It's a good formula to combine those. If you experience an outright divergence, you need to be prepared, okay? It's going to reflect that in the cap line. In terms of the settings, however, this is very interesting. In terms of the settings for the cap line above on the cap line pack, you have the opportunity, as you understand the cap line below, recall the work we did in terms of the 20 moving average is that baseline. This is the price action above the 20 in terms and measured and below the 20 moving average, right? That zero line, you got it. Standard deviations above, standard deviations below when price capitulates below that 20 moving average, which is the zero baseline there. When buyers and sellers combine, sellers are winning, push price to the downside underneath the 20 moving average, that baseline, we go red on the cap line. Price typically drops, right, above. Price will typically drop. So this is built, the original Z-Pack, with the 20 moving average in mind. Wait, we do have a bit of a tool for you to consider. If, for instance, on the Z-Pack, the Capline pack, if you would choose or you would like to see a moving average used to calculate the specific cap line other than the 20 moving average, okay? Now, the cap line, as you understand, is based around the Bollinger Band. I don't want to get into the specifics of it right now, but what I'll tell you is that you can choose, if you go in here, your baseline, remember I said I'd get to that primary, your base moving average settings right now, and I have this geared up because I was going to talk to you guys. The base settings by default are going to be simple moving average 20. You all recognize that. Clearly, that's the midline of the Bollinger Band. That's right out of the box. That's your baseline right here that you see in terms of that black and green line. I can go in and add, if I choose to add, let's add in the bands very quickly. Hope you guys are doing well. Let's add the bands in. Moving averages I have off. Show bands. Multiplier of 2. Band settings. Here we go. So you see now the specific Bollinger Bands. There we go, with the 20 moving average flowing through. That's going to be, guys, it's going to be exactly what you're looking at below, right? Price action up and above the 20 moving average is reflected below, with this being the 20 moving average, and this is the price action below, giving us that blue swing to the upside, the red to the downside. A little bit of frustration here. Red to the downside, blue to the upside, red to the downside, reflected up above. It's a volatility gauge, volatility measure. Now, the important part of this specific video is if you choose to, you can alter the specific central 20 moving average that's computed into your cap line up above for purposes of your signals. So we're not limited to the Bollinger Band consideration. If we want to, we can say, hey, wait, for my baseline, base MA settings, I want to look at the exponential moving average, the 200 exponential moving average. Now, I have just changed the entire chart to reflect the 200 exponential moving average. As you see, quite a drastic change. There you go. Now, you know there's a lot of interaction and a lot of people use it as a signal. Well, now we have the baseline calculative for our, pay attention guys, for the cap line. It is a weighted moving average kernel regression formula. Okay, so that cap line is now geared up and working off of price action up or over the 200 exponential. You could do the 200 simple, very easy. We don't want the exponential. I'm going to go in here for my base moving average settings, the base, what the capital line is based off of. Let's say, okay, no, I want the simple moving average. There we go, the simple moving average. A little bit less reactive with price, right? That exponential is geared to consider the most recent price action more, I'd say more heavily, right? So now we're on just the simple moving average. Now, you could go into your settings and say, okay, wait, so I want to set a price crossing the base moving average, right? That would just be what? Now all of a sudden you have your signals based upon whether or not you're over or under that 200, there you go, the 200 simple moving average. You guys see that? So this is one of your options to work with as you, and I'm expecting you to work with this indicator in terms of the availability of the options to you. Cap line switching color, okay? Price crossing the base moving average or moving average crosses if you want to do double moving averages. And as we go to the cap line switching color, there are just a lot of possibilities as you were to look. Now I'm going to change this to, let's see if I can change this to modern. Let's go to modern. Let me click on the specific. Let's go to the daily real quickly. Let's go to modern. I have this set right now with a cap line, base moving average, okay? Remember that base moving average is the 20 moving average. It's the volatility gauge, guys. We have to have a volatility standard. So price action up and above, right? Up and above the specific, please pay attention, up and above the specific here, as is set, we're going to be looking at the 200 simple moving average. Price action up and above the 200 simple moving average is giving us a kernel capital line calculation, which is demonstrated here. You will see that with price action below that kernel weighted moving average, which is the same that you're going to really see below here, when price action is below, but this is based on the 20, guys. When price action is below the capital line completely, that means the entire candle is set below, okay? Then you're going to fall into a condition red, okay? Expect stutter steps. This is this is exactly what your fire and ice was made for. But take a look, if you would, at the 200 And let's check that again, the 200, where is that? We chose as our baseline MA to calculate our kernel regression average off of the simple moving average 200. Okay, I can do let's do the exponential. All right. You can see in the summer of 2021, nice run, huh? Nice run. Good pickup, nice run. Nice drop from 69,000, right? Nice drop, boom. Nice drop, bam. On the daily, nice drop, boom. Guys, a little bit of a hiccup here. Not perfect, right? Nice drop, hiccup, boom. Hiccup, this area, I recall this area here. This is fire and ice turf, right? It just is. I think Bitcoin was frustrated while Ethereum was doing quite well. Nonetheless, signal, fire, and up and through to, with this conundrum, I'll say here. Anytime that we run into a conundrum, we're going to start looking more intently at the specific type of candle that is set and where particularly the candle is set relative to not only the cap line, but also the base line moving average or moving averages, okay? So some of what you see visually can be discounted or filtered. It could be automated. We may automate that. But do look at some of the additionals here in terms of how this has presented in terms of opportunities to trade. This is with the 200. Now, this is, there's going to be, I'm going to get into the fill or the direction component of the cap line very briefly. I know this seems like a lot. Pay attention about 2 or 3 more minutes, guys. As we were to look at the cap line, in testing, I determined that it could be beneficial to directionally trade in line with whether or not the cap line, that kernel calculative average, was heading up or heading down, to try and remove some of the divergences. We still get some, okay? We still get, and anytime you have a divergence, just understand people are pointing at the market maker like, what are you doing? Literally, what are you doing? You're taking price up with everything dropping. Congratulations. It happens in the market. You all know that. As we were to dig into this specific example, and I just want it to be an example, is relevant to the extent that I'm going to say this, and I'll cap off this specific video here for you now. And I wanted to make something for you to kind of understand. If we don't have that directional, first of all, I'll finish this thought. If we don't have the directional set on the cap line, we may get signal fires, and that's going to be under show cap line. I would leave the 8 bandwidth, 8th relative weighting, and just don't, I don't want to get into the high, low, close, et cetera, okay? These options, we can go over them in a detailed, there may be a better option for you, depending upon which settings you have. Out of the box, these are fine. In terms of the directional versus the fill mode. If you go into fill mode, you may have a short or a long while, and it's still going to be, the majority of these are going to be nice, okay? But you may run into a circumstance where you were to receive, let's say, a short while you were still heading up with the cap line directionally, okay? And it looks like this specific combo has eliminated most of that, but just be prepared between the fill mode and the directional mode. And this is not supposed to be easy information, just so that you know. It's supposed to be advanced. I want you to please, kindly requested, review and you'll see how many more signals we have here with directional versus the fill mode, okay? Depending upon your, let's say this, depending upon the need that you have to trade more or less, or the preference, like for instance here, this short, let's look at this short on directional compared to fill. You see we fired earlier here, all right? There's just going to be some issues that you'll want to walk through, that you'll need to walk through. And in terms of the complication, the idea right now is the following, and I want you to pay attention. You have the opportunity to use this as a simple moving average crossover. No big deal. You have a set of moving averages you want to use them. You have the opportunity to work with the idea, and I know you've researched it, kernel regression, okay? On any, and volatility on any, based on any specific moving average, baseline moving average. If we go to the 5 minute, pay attention real quickly. If we go to the 5 minute, let's look at that 200 on the 5 minute. It is relevant. We're hitting into the 200, right? We're hitting into the 200. You may choose to lay over the 20, the 50, the 100, and the 200. You may have a host of your own, let's say, personal preferences, but as you'll see, you've got the even at the lower time frame, you have the dynamics at work that look like they could be beneficial. Now, on the lower time frame, you may have another. And I know, guys, this requires an incredible amount, literally a matrix of backtesting, literally deep learning powerhouse, a matrix of backtesting for optimization. It is a big project. It is not a 2-week or 3-week or 1-month project. The computer literally needs to run for weeks and weeks and weeks to get the information for optimization. It's a big deal. And depending on the time frame, right, and the statistics between the time frames, and the external data, it's a big project, guys. It's just a big project. Not that it won't be done, but it's a big project. So we have our baseline considerations from New York Institute of Finance. You know that, Bolkowski also, a few. Looking at the lower time frame, we just may say, okay, I want a simple moving average, and I want a 20. That's all I want. I want it just like the Bollinger Band. I want to calculate off of my 20, I'll be able to see up and over, right? You may compare these signals, which still has some nice moves. Boom, 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 right? Some nice moves in here. Bam. This is on the 5 minute, okay? Careful of the chop sideways. After a big move, what likes to happen? Typically, we like to whipsaw range trade. You guys know that, right? Do so while you hopefully, if you've reached a target, do so while you have, let's see, as you've reached a target, do so while you, or until you have achieved a pattern, right? Be prepared to consolidate, right, to tighten up your structure until you have a cognizable pattern, during which time this could become a lot less relevant. And during this consolidation phase, once you've reached your target, your fire and ice becomes a lot more relevant. So you will look at a lack of relevance here with a short fire, long fire. You may get into into some trigger happy signals that are firing. So until you formulate your pattern, then you may look for an ideal short, right? You may look for an ideal entry. Let's say this morning was a nice example of a descending triangle. So this would be, and you have the option here. Just as we look at this, like, well, that's too busy, there's too much going on. Great. If you would like to, you can go to your bands, you can go to standard. What's that going to do for your, there you go, on your specific Bollinger Bands there. And you can adjust these to whatever standard deviation you'd like. Okay, clean it up just a touch. If you don't like the modern, you can go to let's look at this. If you don't like the modern, you could go to the Pro. Pro is going to give you the green and the red, with the red and the blue over if you're on the candles, right? Starts to look a little bit more palatable. Just note that the midline 20 moving average is what? Midline 20 moving average is the one with the white, the green and the red, or if you don't have your bands showing, pay attention. If you don't have your bands showing, take my bands off. Here under band settings, show bands, I'll take that off. If you don't have your bands setting, you'll have a hollow black line in between your baseline moving average. Okay? So does the configuration work around the 20 moving average? Absolutely. its volatility is measured around the 20 moving average, okay, in terms of your Bollinger Band approach. That would be a standard out-of-the-box Bollinger approach. We've taken it a huge step in another direction to where you can measure your volatility around the 200, all right, the 200 or any, essentially any reasonably conceivable moving average that you would like. And I just bring these to your attention because if you have specific preferences already in your trading, this indicator can accommodate them very well, right? We'll go through some additional just kind of updates, training, etc. on this indicator. I just wanted to talk with you through some of the details here because it's a bit complicated. There's a lot going on. And in terms of your preference and what is the best, I'm going to tell you the best setting is the one that allows you to focus on the residual of your technical analysis, okay, and doesn't have you over relying on it, believe it or not, to where this is all you're doing is looking at a cap line, okay? Now, we want to look at all of the confirmation, which is all of the time frames, all of the patterns on the time frames, all of the oscillators, all of the indicators. Yes, this is a conversation, guys. It does comprise, rather, the RSI stochastic, MACD, which is the momentum. So we have all that wrapped up in a box. But I'm going to tell you, if you get out of sorts with and forget during consolidation, you're fire and ice. Yes. And thereafter, once consolidation builds into a pattern, along with your probabilities of throwback and pullback, you've got to have the complete story together. And I wanted just to bring you guys a video so that you would have a little bit of reinforcement in terms of how we're looking at potentially using this. It's going to be a structured project that we are laying into in terms of an optimization, but there are plenty of ways for you to use this right now. Use your toolkit in terms of what you love and what you're geared towards right now. Throw it into the indicator. See how it responds, all right? Don't become too experimental, particularly if you have large, heavy trades, unless you understand the dynamics behind it and you're able to really, I'd say, with diligence, right, compute into exactly what's going on. And when you get to that point and you can really, really understand exactly what's going on with this indicator, however you set it up, it's really, really nice. Okay, so it can be as simple as a moving average crossover. And it's nice to have the moving average versus an EMA, okay? It's nice to have that, guys. EMA is always going to move quicker, right? Going to give you some direction. That exponential part is moving more quickly than a moving average. So that exponential is going to give you the direction, but you have to be careful that you're not forming a pattern, right? That you're not stuck in consolidation. So we'll work on these challenges. It's a lot of up here that goes on, a lot of discipline, next level discipline, isn't it? A lot going on. So I'm excited about 2023, and you guys, hope you're having a good weekend. This is London with VIP Trader and Bitcoin Spike. We'll talk to you soon. Take care, guys. Bye-bye.